Vigilantes. People who take the fight for justice into their own hands. It's one of those words that conjures up a lot of images, like Batman in Gotham and angry mobs with baseball bats. Financial markets have their own version, bond vigilantes. Investors who sell a government's bonds or threaten to do so because they don't like their policies. They're back in the news now that President Donald Trump is back in the White House. So we thought we'd take a closer look. It's what we do here on Reuters Econ World. Every week, we pick a phrase or buzzword and go deep on the economic principles and ideas driving the biggest news around the world. So this week, bond vigilantes. I'm your host, Carmel Crimmins, in Dublin. The term bond vigilante was coined by a US economist, Ed Yardeni, in the 1980s. He used it to describe investors who he said had sold off treasury bonds in protest against Fed policies they thought were too inflationary. When investors sell off bonds, they drive prices down and yields up. The yield is the interest rate governments pay to borrow from investors, and it's the bond vigilante's weapon of choice. In recent years, the bond vigilante seemed to disappear as a market force. Quantitative easing, or the large-scale purchase of government bonds by central banks after the global financial crisis, seemed to neuter them, pushing bond yields lower. But the re-emergence of inflation after the COVID pandemic has resurfaced concerns about their return, and President Trump's economic plans have amplified those fears. So how worried should he be, and how worried should we be about the risk of the bond vigilante reappearing? To find out, I'm talking today to Paritosh Bansal, our financial industry and financial markets editor in New York. Paritosh, welcome.
Thank you, Carmel.
So, bond vigilantes, are they actually a thing? Or is this more like a rhetorical device?
So let me start at the start a little bit.
Let's do that.
So the idea essentially is that bond traders as a group effectively discipline markets if there are bad policies, right? And the mechanism for that disciplining is essentially that, the bond prices kind of move on multiple variables. So there are things like, what does the market think growth's going to look like in the future? What does it think inflation is going to be in the future? What is the supply and demand of bonds going to be in the future? So things like that affect it. And there are multiple scores of thousands of traders who are making decisions based on their own sort of analysis of what they see policies. And taken together, if the market decides that, look, these policies, say like fiscal profligacy, if they're too high fiscal deficits at any given point, they're going to cause bond prices to fall in the longer term. So they're basically saying, look, we're not going to buy these bonds at this price anymore, so you have to pay us more. And, bond prices and yields move inversely. So effectively what that means is they're selling, they're demanding for more compensation, and borrowing costs go up. And so this whole idea of vigilantism is, there's almost an intent that word kind of connotates, but that's not really true. It's a bunch of economic actors who are making their decisions to make profit. And then eventually it ends up sort of putting some kind of a check on government.
So it's almost like by acting in their own economic self-interest, they are putting manners, as it were, on a government, or they're punishing a government.
Exactly. And this becomes really powerful as well, because it's the market then speaking out, right? It's not, you can't really sway people based on their political leanings or other things. It's just pure economics here, right? Like, am I going to make money by holding these bonds at this rate or not? And so it becomes a much more important check on government's power in a way.
So do bond traders get together and coordinate their action? Or is it more that they're individually looking at their screens, seeing where the price is at and making a decision based off that?
So it's the latter, definitely, right? Like, it's thousands of bond traders who are kind of making their analysis. Now, that said, there are some voices that typically tend to be more influential, right? So if you are a big investor, you're managing hundreds of billions of dollars of worth of bonds, then what you say, the rest of the market tends to kind of listened to more.
Yeah.
Right. So over the years, there have been some influential investors like that.
Does anyone actually go with the label bond vigilante? Like, are there traders who proudly wear that title?
So I haven't really come across one. So there have been different sort of instances of bond vigilantism over the years, right?
Yeah.
So one of the more famous one in the US was in the 90s when Bill Clinton came to power. And there were like high fiscal deficits coming out of the Reagan administration. Before that, in the Bush administration, there was high spending.
Mm-hmm.
And he basically had to make this choice where if he kind of continued on that path, there was the risk that vigilantes would kind of take over.
Right.
And during that period, there were some influential names in the market, right? Like, so PIMCO's always been a big bond fund manager.
Right.
At that time, Bill Gross was like an influential name. So we actually asked Bill Gross some of these questions recently. We did a piece about it.
Okay.
So he was talking about bond vigilantes in third person.
Oh.
So you can make of it what you will.
Okay.
But, so I don't think it's like people like sort of, it's not one person's opinion that will completely move the market. So I would almost think that it would be too arrogant for somebody to say, I'm a bond vigilante.
Yeah.
But I think taken as a whole, it kind of ends up having that impact.
So he wasn't twirling a baseball bat when he spoke to you?
No. And we also asked some of Clinton's advisors as well, right?
Yeah.
Like who at the time was sort of whether they had spoken to people like Bill Gross and stuff. And the answer was, look, he was an influential voice and there might have been some conversations, but like it wasn't like they were kind of trying to make Bill Gross happy and the vigilantes would go away. It's like a much bigger question for bond markets.
Paritosh, we like to take a look at a real-world example of what we're talking about on the show. Now, no one really wants to be the real-world example of bond vigilante prey, but you and your team spoke to nearly 24 policymakers, economists, investors, like lots of people, to assess the risk of the US bond market falling into the purview of bond vigilantes. What did your reporting show? Like, how exposed is the US to this risk?
So there is a fair amount of risk, right? Like, so the idea behind that reporting was, look, we've been kind of hearing about vigilantes. Are they around? What's going to happen?
Mm-hmm.
And since September, bond yields were rising effectively as sort of the odds of a Trump win increased.
Right.
You could see this grind higher in bond yields, long-term bond yields, right?
Yeah.
So the question was there. There are lots of like signs out there from the market indicators which kind of are flashing red right there. So we kind of looked a little bit into that.
Like what?
So there are things like, for example, right, like, just the level of debt, right?
Right.
Just the overall amount of debt, it's kind of higher than we've seen in a very long time. If you look at debt to GDP, which is kind of a sense of the affordability of debt, right?
Right.
Like, so how much debt is as a size of your economy? That's kind of, according to Congressional Budget Office estimates, that'll, I think in the next 4 years, exceed what it was after World War II.
Wow.
When the government had to fund a war effort, right? So there's kind of these sort of really large numbers out there, which kind of make you sort of question whether this is possible. And then, when you sort of look at some of the policies that the Trump administration's talked about, things like tariffs, things like, cutting taxes, things like immigration crackdown, like those all have an impact on growth rates. They have an impact on inflation, and it all feeds into the calculus of what will happen to bond prices.
Right.
And so I think that risk is there.
So can we predict when bond vigilantes will strike?
No, I don't think that. So that's kind of the answer there is no.
Okay.
Right. Like, so we spoke to Robert Rubin. He was the Treasury Secretary during Clinton, one of his key economic advisors when they were kind of taking power in 92, 93.
Yeah.
And like his point was, look, these unsound conditions can continue for a very long time, but then it can really correct very quickly and savagely. And so if you look at instances of bond vigilantism over the past 4 decades in various places, it's like some odd thing somewhere, then there's all these conditions that are there, but then something kind of goes there and lights the spark. There are multiple things that could do it, but you don't know what will do it.
Right. I mean, because I was going to say some of those kind of red flags that you were talking about, they've been around for a while. Like in the early days of this podcast, we interviewed Paul Krugman about the debt question and, those figures of debt to GDP, total level of debt, all exceedingly high. Is what's changed the new administration? Is it the arrival of Donald Trump back in the Oval Office and potentially the economic policies he may introduce? Is that what's made things different in the last few months?
Yes. So that's been one factor, right? Because, and look, to be fair, right? Like there's lots of uncertainty about what he'll do. And like if you look at somebody like, Scott Bessent, as Treasury Secretary,
Right.
They're making a lot of noises where they are kind of, the market sees them as people who understand this issue, right? So there are lots of checks and balances. And then another kind of big thing in the US's favor is the fact that the dollar is the world's reserve currency, right?
Right.
Which kind of, when you kind of boil it down to it, what it really means is that there's always demand for US assets.
Right.
And so there's always, when there's signs of stress, like people go in and buy treasuries. And so there's always that kind of buyer that exists, which a lot of other countries don't. So Trump's policies, as he comes in, are going to test that. I think that's one of the things, right? So if you're sort of saying, and it's I think more a question of, are there going to be surprises emerging out of this, right? So if the market thinks, okay, he's saying, I'm going to cut taxes.
Right
now, is it going to be an extension of what was the original tax cut from his earlier administration? No, is it going to cost a lot more, right? So if it suddenly kind of costs a couple of $1 trillion more, then that's a surprise for the market. Or like the impact of tariffs, like depending on how those are put in place and to at what extent. How much do they add to your revenue? How much will they actually pay for these things?
Yeah.
How much does it start to depress growth and have these sort of second order effects, which a lot of people are warning about? And then does that kind of at some point create an issue where you have some kind of a flare up? It's like nobody can say if it'll cost something in the next 4 years. Maybe they will, maybe they won't. And another like really fascinating point that we came across as we were sort of talking about this with some of these people was that like there's this sort of, the signals aren't clear.
Right.
The bond, so it can be that, and, smart people are kind of arguing this, right? Credible people say that, the bond market could be sort of yields are increasing because people expect more growth.
Right.
Or it could be because people expect more inflation, or it could be because there's going to be more supply and demand. And then sort of your assumptions and your kind of view of the world sort of would lead to your understanding of how much probability do you place on any of those factors. And then how you are thinking about it and how the market is thinking about it and how policymakers are thinking about it could be completely different.
Right.
Which then again increases the risk of the wrong response to a problem.
Right. So in a way, people could be selling bonds for different reasons, some of them for reasons of growth.
Exactly.
You mentioned there as well that the US has some things in its favor. I mean, mainly, isn't it, that it's the US and it's the dollar is the reserve currency. The Fed has huge kind of unmatched financial market power. That's all kind of in the US, I suppose it's called US exceptionalism, right?
Right.
Is there a sense that exceptionalism is being chipped away at now? Does it feel different when you talk to people in the market?
So we don't know yet. But that's kind of part of the fear, right? Like, so I think in some ways, in the immediate term, that exceptionalism might get even stronger.
Okay.
Because some of the Trump's policies, like if he puts tariffs, then that's going to be terrible for people outside.
Yeah.
Like it's going to be terrible. Like Europe's going to be a big loser in that, for example. And so in that sense, the exceptionalism and the relative attractiveness of US assets could actually increase, at least in the short term. Now, there are other factors in there which are kind of wild cards, right? It depends on how other countries, a lot of treasuries are bought by foreign buyers. Like, are there kind of things like sanctions or things like wars and, if there are trade wars between US and China, like are there kind of things that could really shift the demand for those assets in any fundamental way because of geopolitical reasons?
Yeah.
We don't know the answer to that. And so, in fact, some of the people we were talking to were saying in some ways the danger of bond vigilantism might be more imminent in other countries.
Right.
Right, where they don't have the benefit of having the dollar as the reserve currency, right? So Europe's been kind of pointing out, like you've seen what's happened in the last few months in places like the UK. You've seen what's happened in France, where like bond yields started to rise, and like in the UK in the last 3-4 weeks, right? The government's come under pressure because of that.
To fully vanquish the threat of bond vigilantes, you need a fiscal solution, Paritosh, right? Like it's the government that ultimately has to get things under control, spending-wise and revenue-wise.
Exactly. So if you look at the 80s, what was happening in the 1980s in the US was you had this sort of cut taxes to increase growth and have higher spending, sort of a philosophy, and they ran deficits under Reagan. And at that time, by the way, there were also like bond vigilantes who were sort of fighting very high inflation levels. So there was kind of pushback against that as well. But like by the time Clinton came to power, I think the choice he had was whether he cuts deficits, and that would require raising taxes and cutting spending, both unpopular moves, or he goes the other way.
Yeah.
And so he had to basically do that, take that choice, and he ended the. So we didn't really have a vigilantism movement during Clinton's administration as such, right? Like the yields did go up, but it was managed. And by the time he left power, we had a surplus in the US. Whereas if you look at something like Greece, it had to be bailed out.
Yeah.
And remember all the austerity measures they had to take at that point, which were really, really painful for the ordinary person in Greece.
You mentioned the fact that the kind of the turbulence that we're seeing in the US bond market is filtering out into other markets, so like the UK, France. If the US did come under attack from bond vigilantes, what is the potential fallout for the rest of the financial system, for the rest of the world?
So it depends. So US is obviously, just like its basic principle, is the world's largest economy. Treasury markets, bond markets are the most liquid. They're sort of, kind of the fundamental plumbing of global financial system. So if they get disrupted in any meaningful way, then that'll ripple through different ways across the economy. Now, the one sort of thing about that, and I don't want to be alarmist here, because the Fed is there.
Right.
Like, so if there is suddenly a moment when your yields start to rise really, really fast, it's basically a sign that there aren't enough buyers of bonds. And so, the Fed's going to step in. It's got a massive balance sheet. It already has several facilities put in place in the last, 15 years or so, dealing with different crises, where they'll just buy and sort of solve for that. And so I think it kind of depends on how long it continues, how bad is it, and whether, if it's unfettered, then the consequences are much more immediate and worse.
Yeah.
But any sort of a crisis like that, even if it's, doesn't extend over a long period of time, is going to cause ripple effects.
Right.
Like, because there is a liquidity problem, there is going to be sort of people moving towards safe haven assets, which is dollars, and, so US treasuries, and so liquidity moves out of other places. So there's just like global flows, which will disrupt normal economic activity in different ways.
Right.
So I think even that's dangerous. Like, it may not linger, but then if the Fed has to step in and really intervene in a meaningful way, then its balance sheet starts to expand massively again, which then means is another way of saying that there's more money in the financial system, which then kind of leads to things like inflation in the longer term. So it's like you're kind of putting a Band-Aid over a problem in a way.
Right.
And that'll happen. It'll have sort of some sort of collateral damage at that point, depending on how intense it was or how big the damage was. But then it kind of keeps bleeding.
Are bond vigilantes, are they forces for good? I mean, they're obviously out to make a profit, but through their activities, are they a force for good?
So I think it's like, I'm more agnostic on that term. Like, I mean, I think we should think about these. These are like a bunch of traders who are sitting there making money, right?
Yeah.
I mean, they're kind of Wall Street guys who are trading. They're speculating effectively. So I don't think, and again, like, they're not as if sitting somewhere saying we're going to keep government in check.
Right.
They're sort of responding to the news of the moment and making money. So I wouldn't kind of attribute good or bad to them. They're just efficient markets functioning in a particular way. Like, it's almost like by the time the market, I think it's more a reflection on a failure of policy, right? Like, by the time the markets responded to it, it's almost too late. Because you can't, then your hand gets forced. Like, Kwasi Kwarteng, who was the UK finance minister in the fall of 22, when their mini budget caused a massive spike in the rise in gilt yields and the pound to fall. And like, we asked him, what's kind of like, what was sort of in going through your mind, or what's your kind of top recollection at that point? And it was like, it was an atmosphere of chaos. And so it's just like, when that happens, you just need to, things move quickly. You have to respond quickly. And whatever policy prerogatives you had need to be kind of adjusted. Otherwise, the market's not going to calm down. So the monetary policy, the central banks can come in and stop it for a while. But then, they had to change in the case of the UK, like the government fell.
Yeah, you're making policy when your house is on fire, which is not a comfortable place to be.
So clearly the policy you're making no longer works.
Yeah.
So then you got to like find water to put the fire out first.
Paritosh, thank you so much.
You're welcome, Carmel. Thanks for having me.
A big thank you to Paritosh and everyone who covers the bond market at Reuters. Check out their great work on Reuters.com or the Reuters app. If you want to hear more about the UK and its recent bond market woes, check out last week's episode. It's all about the UK, and we hear from Finance Minister Rachel Reeves in Davos. Sound design, composition, and engineering on this episode was by Josh Summer. Our podcast team includes Kim Vanell, Tara Oakes, Gail Issa, Sharon Reich-Garson, David Spencer, Jonah Green, and Christopher Wall-Jasper. Our executive producer is Leela de Kretzer. Remember, for all your daily news, check out our weekday show, Reuters World News. You can catch it on the Reuters app or wherever you listen to your podcasts.